Hello everybody. This is the time of year that we start talking about taxes, and that word can be used in a lot of different ways because we're taxed for a lot of different things. But if you have a job, which some of you do, in the month of January you will get your W-2 form. In fact, I just got mine. I think they have the month of January to send it to you or give it to you or send it to you on a PDF or whatever. It basically is an official W-2 document from the government, from the IRS, stating how much money you made the previous year in 2020 and how much was taken out of your paycheck for different reasons. And then you use that to file your income taxes for the year before. And you have usually until April. Last year was all wacky, but usually you have until April to calculate and figure all that out. And there's companies that do that for you, like H&R Block, or you can do it on TurboTax online, or you can have a private accountant do it, or you can do it yourself. And we're going to walk through all that, but before we get into the actual income tax process, filing your income taxes, we need to talk a little bit about where that comes from. And it starts a little bit sooner than that with money that's taken out of your check, and we call those payroll taxes. Because we all know that if you have a job and you make $10 an hour, you don't really get $10 an hour to take home, right? There's money that's taken out of your check for various reasons, and that's what we're going to cover at the beginning. So, payroll taxes. Let's talk about these. They're taxes imposed on employers or employees and are usually calculated as a percentage of the salaries. Payroll taxes generally fall into two categories: deductions from an employee's wages, that's the worker, and taxes paid by the employer, that's the company, based on the employee's wages. So if you own a company or run a company and you pay employees, you have to also pay the IRS payroll taxes. And if you work for a company and you get a paycheck, you also have to pay payroll taxes. But we're going to focus on the payroll taxes deducted from the employee's wages, because we'll all be employees before we'll be employers, right? Okay, federal income tax. The federal government levies a tax on personal income. So if you make money, you have to give the government some of that. And some people see that as unfair, but it's how our government operates. And then to the level of, how much they take is always an argument, and what they use it for is always an argument. But in order to have the government function the way it does, they do have to take money from all of us and then give it back to us in forms of services somehow. And those services are national programs such as our military, our national defense. That's how that's paid for. Right? Our Army, Air Force, Marines, all of that is paid for by taxes. Foreign affairs, social programs, physical, human, and community development, law enforcement. If you have a federal law enforcement agent, like at the federal level, at the United States level, that would be like a marshal, a U.S. marshal, or an FBI agent. They're paid for by federal taxes. Okay. Then we have the Federal Insurance Contribution Act. And it's sometimes obviously abbreviated with the acronym FICA, F-I-C-A, Federal Insurance Contribution Act. So you might see it on your pay stub as FICA, and they take money out of your paycheck to provide benefits for retired workers, anybody who's disabled. And it's also known as the Social Security tax. So you might get Social Security payments if you are retired or disabled. It's sort of like a very small retirement or safety net for people who can't work, either because they're elderly and they've worked their whole life and now they're quote unquote too old to work, or if they're disabled for some reason, then they would get safety money from the government saying, here, it's not your fault you can't work, so here's Social Security tax. So you just need to know that Social Security and FICA are the same thing. Social Security is the other term for FICA. A W-4 form. W-4 is the form that you filled out if and when you started a job. So when you first got hired at a job, or if you haven't yet, you will. One of the first things they do with paperwork is make you fill out a W-4 form. And that is used to tell your employer how much money to take out of your check to save up for when the taxes are due at the end of the year. So you estimate. So what really happens is when you get money taken out of your check every week, month, whatever frequency you get paid, you're not actually paying your taxes yet. You only pay your taxes once a year, but almost nobody would be able to save up for that. So they take money out of your check every week, and it's sort of like stored in this virtual little box, and it's saved up and accumulated over the year. And then at the end of the year, when you figure out how much you do owe, there's hopefully enough in there. And you have to estimate that. And that's what we're going to talk about. Medicare tax. Medicare is sort of like the FICA tax up here, except it has to do with health care. So it's providing health and medical benefits for individuals when they reach 65 or who they're retired or their spouses. So it's instead of just money when you can't work anymore, it's health care when you can't work anymore. So we take care of people that can't work, but who pays for that? We all do, because we'll all take advantage of it someday. Okay. So here are the rates. The FICA and Social Security tax rate, and this is the same for me, you, anybody in the country, 6.2%. So if you make $100, $6.20 gets taken out for the Social Security fund. And you have to pay into that to help other people, and then someday you'll benefit from that as well. At least that's the plan. The Medicare tax, if you made $100, $1.45, 1.45%, comes out of everybody's paycheck to help fund Medicare, which is health care for people who can't work anymore. So if you add those together, 7.65% comes out just in Social Security and in Medicare. Now there's also federal and state taxes that come out of your check. So you're not just losing 7.65%, you're losing more than that out of every check, but that's how much comes out for Social Security and Medicare. So if you have ever begun a job, this is an old one from 2014, but they generally haven't changed. As far back as I can remember, they looked like this when I first worked. This is a W-4 form. So when you first start a job at every different employer, so if you start a job somewhere else, you have to fill out a new one. You have your name, Social Security number. Hopefully that's not Alicia's real Social Security number. And then you click whether you're single, married. And then number 5 is where it gets into the estimation here. Total number of allowances you are claiming. And she put 1. So basically what you're doing here is telling the government, and you can put whatever you want on here. You're saying, I take care of one person. So they say, okay, well that's going to end up relating to how much tax you owe at the end of the year, so we're going to take out enough to cover that. If you put a 2 here, you would be taking care of 2 people, maybe a child and yourself. In that case, you wouldn't owe as much in tax because the government knows you're taking care of 2 people. If you were taking care of 4 people, you'll owe even less in taxes because the government knows you're taking care of 4 people, and that's not easy. So the higher this number, the less you'll owe in taxes. Now, why couldn't you lie and just put 10 here and get almost nothing taken out in taxes? You could. The problem is, at the end of the year, that's great during the year, your paychecks will be higher, but then at the end of the year, you aren't going to owe nothing in taxes because you really don't take care of 10 people, and they know that. So your tax bill is going to be higher, and then you're going to be left owing a lot of money. And then if you want, you can just take out any additional amount, like a dollar figure. like another $100 or another $200. That's totally up to you. So 5 and 6 relate to how much money comes out of your paycheck. And then you sign it, and it's on file, and you can change this whenever you want. I could go to our business office at South Colony, because that's where I work, and I could say, could I please update my W-4 form? Because, and actually this happened, I think it was a year ago. I owed money on my taxes. I didn't have enough taken out one year, and then I filed my taxes, and it turned out that I owed the IRS money. I didn't want that to happen again, so I asked them to take out more money out of my paychecks every 2 weeks to cover that the next year so it wouldn't happen again. So you're free to update that anytime you want. So in this situation, you have a $2,000 a month salary. Your employer takes $50 out for retirement, which is reflected down here. That's something separate. But of that $2,000, 6.2%, which is calculated right here, is $124. That comes out for Social Security. 1.45% is calculated right here. That comes out for Medicare. And then she selected either 0, 1, 2, or 3 on this line right here. And they took out $237. And all that comes out. And that's how much she's left with. And there's no rule for this, but in my history of working and earning money, I get somewhere between 2/3 and 3/4 of my gross salary. And gross is like what they tell you you're going to make, $10 an hour, $50,000 a year, whatever it is. So somewhere you should always plan on somewhere between maybe 67 and 75% of your salary will actually go into your pocket, and the rest goes into taxes or withholdings of some sort. That's not official. That's just a rule of thumb. Okay, so now you're going to click on these 3 activities. They're little tiny quizzes that the IRS has on their own website just to teach the public how to understand the IRS format, procedures, and taxes. After you do this and the Ed puzzle is complete, you're all set for today.